Hey guys, what is up? It's Dusty here, and welcome back to another day in paradise. Yes, I am talking about the world of finance. Today, giving you guys a quick update video on general finance, money, business, and all of that. And these videos have no advertisements on them whatsoever, no side ads, no mid-rolls, no nothing. And all I'm asking from you guys is just a quick like on this video, and maybe even subscribe because it helps me out a ton. And I'm asking nothing in return, just a like button. And let's get into the news of today. Senate passes new $484 billion relief bill to replenish small business loans, fund hospitals, and testing. So yes, a new federal aid package designed to provide economic relief to businesses is still immobilized by the coronavirus, just passed in the Senate. The $484 billion in total aid passed after 2 weeks of negotiations between Republicans, who wanted to press additional small business funding forward without much reevaluation, and of course the Democrats, who were eventually able to secure additional relief measures beyond the small business funding at the heart of the bill. The focal point of the new legislation is the $310 billion it will allocate to the Paycheck Protection Program, a key feature of the first relief package. That program was beset by problems from the outset, with a huge portion of small business owners failing to secure the forgivable loans through banks even with the prompt applications in the program's earliest moments. Within a few days of going live, it became clear that the application process was plagued by issues, and its massive $350 billion pool of funds had already dried up. Some small business owners also reported that they couldn't find a bank to accept their application, as some banks prioritized existing customers for that. Among those issues, some of the money was sucked dry by entities that a program for small businesses probably shouldn't be helping out to begin with. Remarkably, even hedge funds, major restaurant chains, and Harvard University cashed in on the loans under the existing terms, while most owners of actually small businesses were left high and dry. And then again, there's a little bit of a discussion, some more info on exactly who should be getting the money and what the situation is surrounding it. But I noticed one comment which said, "Such selective reporting," yes, that's the truth, "it's a whole one-sided perspective here," which is definitely the truth, but I found it a pretty interesting piece of news. I saw it make a lot of headlines, and I thought you guys should know about it. Of course, most of y'all have already seen the oil price has been going ridiculous. It's been completely crazy. Oil price crash drags inflation down to 1.5%, which is actually a pretty interesting statistic to see as well. Even before the recent capitulation, the price of oil was on the slide in March, and this dragged inflation down slightly from February's 1.7 to 1.5%. Oil prices have a massive impact on the UK's inflation rate, and with prices at the pump and home energy costs getting cheaper, we'd expect this trend to continue for the next couple of months. So I don't know what the whole world is at in terms of inflation, I guess. I don't know what the US is at. These are numbers for the UK. But I actually didn't expect the inflation to go down this much over the month, as it's really not what I was expecting at all. But oil did such a crazy move that I guess a lot of things are not as they seemed before. Here's another piece. Oil jumps after Trump orders Navy to shoot and destroy Iranian gunboats. Again, it's a little bit of selective reporting, but it's the truth. So after 2 dark days for crude oil prices are rallying again on Wednesday morning after US President Trump triggered a small short covering rally by tweeting that he has ordered the US Navy to shoot down and destroy Iranian gunboats if they harass US ships. Once again, President Trump's tweets managed to lift the oil prices, hinting at an escalation of conflict with Iran. Tensions in the Strait of Hormuz, the world's #1 shipping lane for crude oil, continue to play a role in the markets, albeit a much smaller one. The world hasn't forgotten about the attacks of the Abqaiq oil facilities in Saudi in September, which triggered a 20% price jump in Brent crude, or the assassination of Iran's top general Qasem Soleimani, which put the region on the brink of war. Trump's president's tweets follows a string of incidents in the waters of the Iranian coast, starting with the harassment of US-flagged box ship on April 2nd by heavily armed Iranian patrol boats, followed by Iranian's deployment of anti-ship missiles on Qasem Island on the same week. Pretty heavy stuff, if you actually ask me. Reports of the seizure of a Hong Kong flag tanker on April 14th weren't confirmed by Iran, but suspicion fell almost directly on the country's paramilitary Revolutionary Guard, and it was Iran's latest move, however, that provoked Trump's ire. Last Wednesday, a group of 11 Iranian patrol boats made some dangerous and harassing maneuvers near U.S. warships, passing within 10 yards of a U.S.-flagged vessel, and after badgering the U.S. vessels for around an hour, the Iranian boats left the scene. Iran's government did not react to the incident, but Trump came out with a firm response on Wednesday morning, giving clear instructions to the U.S. Navy. He said, "I've instructed the U.S. Navy to shoot down and destroy any and all Iranian gunboats if they harass our ships at sea." Pretty interesting. While President Trump's tweet may have distracted the market for a bit, markets are bracing for a very bearish EIA crude inventory report, which analysts believe could become the largest crude inventory build on record. In a normal oil market, Trump's tweet could have been a game changer, but it is a woefully oversupplied market. Its bullish effect won't last very long. 300 billion pounds of new UK bonds on the way, primary dealers. London, Reuters. A record-breaking 300 billion pound deluge of government bonds is on the way from Britain's debt agency as Finance Minister Rishi Sunak seeks to fund a surge in public spending in the face of the coronavirus crisis. The Reuters survey of 11 primary dealers forecast gilt issuance of around 300 billion pounds, which is roughly $370 billion, when the Debt Management Office, DMO, announces its revised remit for the 2020-2021 financial year at around 6:30 GMT on Thursday. Primary dealers are banks hired by the government to help create a liquid market for its debt, and last month, before the coronavirus crisis escalated, the DMO said it planned to issue 156 billion pounds of gilts. But the unprecedented measures announced since then to avert the collapse of Britain's economy means that it will have to publish a much higher issuance plan on Thursday. Issuance of 300 billion pounds would be a record for any financial year, topping the 227 billion pounds issued on 2009-2010 in the aftermath of the global financial crisis. Pretty interesting stuff. Another thing, I guess I got a couple of things from the UK right now. I don't really know how that came to be, but I guess how do I do this ad blocker? Pause. Just refresh here. Tenants who asked London property company for rent reduction. Let's actually tune that down if I can. I don't know if it will still play for you guys, but I hope not. Pretty annoying as well. Why is this an ad? There we go. Tenants who asked London property company for rent reduction told to use holiday and lunch money, which is a pretty heavy thing, guys. I mean, realistically speaking, a lot of people can't pay right now, right? It's not that crazy. So, London Mayor Sadiq Khan calls for the triple lock system to protect renters who are struggling to make ends meet. Tenants who asked the rent reduction during the coronavirus pandemic were reportedly told that the request was unrealistic and that they should pay up in full using money they would have saved by not going out for lunch or on holiday. It came as London's Mayor Sadiq Khan called for a triple lock system to protect renters who are struggling to make ends meet, among growing fears that housing costs are pushing people into debt. Mr. Khan called for the increase in welfare support for renters, a bar on landlords evicting tenants after the crisis for rent arrears they have accrued during it, and an end to so-called no-fault evictions. With millions of people left out of work or taking a pay cut due to being furloughed, increasing numbers of tenants are encountering problems with their landlords over rent payments. More than 100 residents in the block of Somerford Grove in East London who wrote to their landlord requesting a 20% rent reduction were told the proposal was unreasonable and unrealistic. And from my perspective, I think it's actually not that crazy that they asked for it, but it's also not that crazy that it's denied. Because, I mean, 20% could also mean the world to that renter, right? Because the person also has to make its money. And maybe he only has, let's say, for example, 5 properties. And that's his main income. If they asked for a 20% reduction and he was just making ends meet because he didn't want to work, he just wanted to, have rent or I guess profit from that his entire life, it could also mess up his life completely as well, right? And that's something I think about as well. And also, yeah, I guess they should just be asking for delayed rent payments not reduced. Because, I mean, in my opinion, reduced rent is kind of a BS thing. I think delaying it and making them, maybe pay over time a little bit more, yeah, it could be something of an idea. But lowering it all the way, I think it hurts too many people to really do that all the way through. And 20% is a lot of money. B&Q to reopen 61 stores with social distancing measures in place, the full list. So that's actually not just one thing I want to talk about for the UK, which a lot of my articles seem to be from, but actually just a general thing that I've been seeing right now is that a lot of stores and a lot of places to visit are opening again piece by piece. And I think it's just because people are starting to slack off a little bit in their drastic measures, but also because I think, it's time again to let some people in, into the hospitals and whatnot. I think that's a little bit of something that's going on. Don't know too much about it. Don't want to give you guys advice on anything like that, or don't want to go into conspiracy. But they're opening a lot of stuff again, and I mean, it was needed as well. But that's going on right now. In the Netherlands, a lot of things are opening again, like next month or so. A lot of things are also slacking off a little bit, where the measures they're taking are just worsening and worsening. And I saw a lot of things about the UK as well, opening a lot of stores again. If you go outside, it starts to get more busy and busy every day, and that's that. Bank of England governor says banks could face a breaking point if pandemic worsens. And again, this is not just for the UK, this is actually for the entire world. There's been a lot of different theories going around right now about what would happen to banks and to the whole economy if the interest rate, for example, in the US would go down below zero. And I have already expressed to you guys my thoughts on the interest rates over the entire world and over the ones specifically in America. But one thing I find so ridiculously interesting is how Trump thinks about it, and also what is kind of looking like where it's going to go. So my personal kind of feel about it all is that all the I guess, how would you say the English word for it? I don't really know the word for it, but all the investors, so to speak, in Europe here, since it's not that easy to get that much of a quote-unquote positive yield on those bonds in Europe, they go to America, right? And the Americans stay in America, for example. But what happens if America goes to below zero as well? Where are those people going to get their yield? That's something I've been thinking about for a little while. There's a whole more elaborate story on it, but that's, I guess, the easy ones and twos on that. And there's also some thoughts about the banking system breaking, because normally one of the, I guess, most traditional ways to help an economy up again is by lowering interest rates. But as we've seen in the economy, and I guess just we've seen happen, is that once the interest rates are below zero, lowering those interest rates further does not have that much of a positive effect anymore on the whole system. And all of that could break the banking system. And now, if you guys want more info on that, I recommend just watching a video on negative interest rates. Just type it in on YouTube or Google. You'll find a whole report and a ton of videos explaining exactly what it is, what it would do, and what people are thinking about it. You'll also find Trump's stance on it, which is definitely worth a little bit of a read. But guys, that was it for this video. Quick little update. Today, I think another video will pop up on this channel because I got some really cool stuff to cover. Maybe tomorrow. I don't know quite yet. But if you guys enjoyed this video, make sure you press the like button and subscribe. There's no ads, as I said before, so I appreciate all the feedback. I'll see you guys again in another finance video.